JPow is going to jail. Does that mean it's finally time for alt season? Okay, hold your horses. You might be confused because a lot has gone down in crypto these last few weeks. Trump's veins are about to explode, but Bitcoin is exploding even more, breaking new all-time high after all-time high. And now even ETH is making massive moves. In fact, ETH's price grew by $1,000 within a month, from mid-June's $2,500 price all the way up to around $3,500 as of recording. And yet, most investors still feel unsure about what's next. That's totally fair. This market is at weird crossroads right now, and if you only look at price action, you're gonna miss the bigger picture. Because underneath it all, some of the most powerful catalysts are quietly building. So if you need an idea on where to go from here, let's look at the metrics and make sure we're ahead of everything going on in crypto lately. The first thing I want to show you is this chart from Marty Party. Basically, he's comparing two different charts, one that shows the liquidation levels, which are the price points that leveraged longs and shorts would be liquidated at, and the other compares global liquidity and the Wyckoff metric with Bitcoin. Don't worry, I'll explain Wyckoff in a second. Marty's idea is that market makers and exchanges use their deep liquidity to manipulate large cap prices into the strongest liquidation zones. This is what goes on in the low time frame, meaning the short term. But the higher time frame is what we want to focus on for our spot portfolios. Here's the chart showing something called Wyckoff accumulation. I know that sounds technical, but here's what it really means. It's a pattern that shows how the whales and institutions secretly load up on crypto before a major pump, and it happens in stages. First, there's a big crash called the selling climax or markdown. It's where retail panic sells and the whales start buying quietly. Then we see the price move sideways for a while, and during this phase, price keeps bouncing in a range and retail traders get bored or shaken out. That's exactly what smart money wants. They're buying while everyone else is giving up, and that's what we call the accumulation phase. Then comes the spring. In Marty's chart, it's marked off as April 6th, which you probably remember as the time your crypto port was in the depths of hell. At that point, you have tons of people panicking and selling out. But right after that, the price shoots back up and never looks back. And you can see that over the last few months, we've been on a solid uptrend. So what's the plan from looking at this? Well, here's how we can use the Wyckoff metric. It gives us an idea on exactly what moves the large institutions are making, and our goal is to follow those moves before retail FOMO kicks in. So if we see Wyckoff accumulation after a markdown, it tips us off that institutions are expecting a big move to the upside soon and are loading up their bags, and we'll be able to follow. We can take advantage of the same thing on the way down too by following the institutions as they exit. Here's how. As the coin is skyrocketing and retail is FOMOing in, you may see institutions begin to sell off their bags, causing the price to stall after an uptrend and start trading sideways for a bit. This is a telltale sign that you're in the distribution phase. Some other signs are if support levels are being tested more often than resistance, when breakouts quickly die off, and when you see volume spikes lining up with strong downward moves. So when you see these signs, you'll know it might be time to exit your position before you become exit liquidity. Now, according to the chart, it looks like we're approaching markup zone. Here, the price breaks out of its trading range and starts trending up, which is what we've been seeing with the markets recently. Marty's plan is to continue accumulating and holding spot while tracking the Wyckoff charts along with M2 money supply. If you don't know what M2 is, it's basically a metric that measures the total amount of liquidity available across the world. It looks like according to the cycle of global liquidity, we could see a top somewhere closer to the middle of 2026. So buy spot, right? Well, that might be easier said than done. There's so many places to buy crypto that it can get confusing, and you should know better than to be accumulating through some sketchy or high fee exchange. Luckily for you guys, I got you a sweet deal with WEEX exchange. If you sign up with my link in the description, they're going to give you up to 30,000 USDT in bonuses, and you automatically get a 30% reduction on your trading fees. And don't just skip over this and think, oh, I already have my exchange, there is no point in switching. Trust me when I tell you, those tracking fees add up fast and seriously eat into your gains when the market starts popping off. This is one of the best exchange deals on YouTube, and it's only available for a limited time. There are no KYC or country restrictions. So sign up with the link down below and let me know what you guys think. So understanding liquidity and tracking the big players is one thing, but it won't help you if you're going in blind. With the amount of ridiculous headlines coming from the American government, you could blink and feel like you missed a whole week. First off, we just saw Member of Congress Anna Paulina Luna criminally refer the Fed's Jerome Powell for perjury regarding the $2.5 billion Fed building. This is basically an official suggestion for the DOJ to investigate him. J. Powell spent $2.5 billion on a renovation of the Federal Reserve headquarters, and it looks like Trump wants to use this as his opportunity to get Jerome out of the hot seat and replace him with someone more willing to do Trump's bidding. And I'm thinking the most likely candidate would be the Governor Waller, who recently called for interest rate cuts this month. Of course, one of the main things Trump wants to do is cut interest rates drastically, and we know that reducing interest rates will open up the doors for increased spending on risk assets like crypto. I'm sure you can guess what would happen next. On top of that, we just witnessed crypto history being made during Crypto Week. The US House of Representatives passed 3 major pieces of legislation that could reshape how crypto works in the United States. These include the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance State Act. So let's start with the Genius Act. This bill sets some much needed ground rules for stablecoins. It requires stablecoin issuers to hold full reserves, meaning every coin in circulation must be backed one-to-one with real assets. So if you're holding a stablecoin, you should be able to redeem it anytime without issues. On top of that, issuers will need to register either federally or at the state level, and they'll be subject to regular audits. The goal here is to prevent disasters like Terra Luna from happening again by forcing stablecoin providers to be fully transparent and properly backed. Then there's the Clarity Act, which aims to settle one of the biggest questions in crypto: who regulates what? Right now, it's unclear whether tokens like Ethereum fall under securities or commodities, which has caused confusion and lawsuits. This bill will help define digital assets more clearly, outline how a token might shift from being a security to a commodity, and offer better guidance for exchanges on what can and can't be listed. And finally, we've got the Anti-CBDC Surveillance State Act. So this one is designed to stop the US government from launching a retail central bank digital currency. Unlike countries like Australia that are embracing CBDCs, this bill takes the opposite stance. Lawmakers backing it are worried a digital dollar could give the government too much control, like tracking every transaction or even limiting how and where you spend, and it could centralize the financial system and cut out private banks altogether. This bill is trying to keep crypto aligned with its most important principles, decentralization, and I'm all for it. All 3 bills passed with strong support from both political sides, and now all that's left is for Trump to sign them into law. And he's already actually signed in the Genius Act. This is a huge win for the crypto space since it adds clarity and protection for retail investors without giving up decentralization with CBDCs. And with all this news, the markets are definitely reacting. Look at the total 3. The chart that tracks the total crypto market, aside from Bitcoin and Ethereum, it's up big time on the monthly time frame, and it even managed to climb back over $1 trillion for a bit. This shows that altcoins are starting to make a serious push for the first time in a while. Now, you might be wondering, how could I have gotten ahead of this and bought in before these coins started to climb? Well, you have to be way quicker than the crowd when it comes to news. That's why our research team is going heavy on alpha, TA, and market updates over at the FireHustle Discord. If you're interested in staying ahead, I seriously think you should come join me. I'm in there every day breaking down market trends, talking strategy with the community, and staying ahead of narratives before they play out. If you want to go deeper, the link is in the description below. But the major thing to focus on is ETH's recent price action, because it may play a key role in moving us forward on the path to alt season. This is the chart I'm talking about, and it isn't just a theory, it's something we've seen play out across multiple cycles. It's the flow of capital rotation that moves from safety to risk, and understanding where we are in this pattern that can help you position for max upside without chasing pumps and FOMOing. It all starts with Bitcoin. When new money enters the market, it almost always enters through BTC. Why? Well, because it's the safest, most liquid, most institutionally accepted asset in the space. That's phase 1. Bitcoin rallies hard, dominance rises, and headlines explode. We've been in that phase for a while, and not too long ago, I mentioned Bitcoin dominance was at a whopping 65% and how it felt like a serious peak. Well, now it looks like we're starting to see changes happening fast, and Bitcoin dominance is dropping to the 61% range. That brings us to phase 2, Ethereum. As confidence grows, investors start reallocating from BTC into ETH. that's when we see the ETH BTC ratio start to climb. If you don't know, that's simply the ratio of ETH's value compared to Bitcoin's value. We saw this in 2017, 2020, and again in 2021. Ethereum surges shortly after Bitcoin and signals the start of the altcoin warm-up. And this phase right here is exactly why I'm bringing this chart up in the video. We're finally seeing Ethereum start to climb as it pushes past $3,500. And if you don't think that's impressive, let me put this into perspective for you. A little under a month ago, near the end of June, ETH's market cap was around $265 billion. As of recording, it managed to climb all the way to $435 billion. That means over $170 billion was poured into ETH in just over a month. That's insane. And that's why ETH BTC was able to reach 0.03, a number we haven't seen since January of this year. All of this is reason to believe we might finally be starting to move towards the phase 2 on the path to alt season after waiting for what feels like a lifetime. Phase 3 is when that money starts to trickle into large caps. Major players like Solana, Avalanche, BNB, and XRP start picking up traction along with some of the large projects within their ecosystems. These are higher risk than ETH, but still seen as blue chip altcoins. When they move, it confirms that capital is rotating out of majors and into ecosystem plays. Then comes phase 4, full-blown alt season. This is where liquidity pours into low caps, meme coins, and random pump fund garbage. Retail jumps in, TikTokers are live streaming their pump fund launches again, celebrities are shilling rug pulls, and projects pump purely on hype. This is also where the risk is highest and the need for a proper exit strategy becomes crucial. At this point, it's a gamble to stay in the market too long, but it's also where the most gains could be made. Knowing what phase we're in helps you avoid the trap of buying too late and getting screwed when the massive correction finally hits. And based on current Bitcoin dominance, ETH BTC levels, and liquidity flow, I'd say we could now be moving forward into phase 2 of the cycle. That means the window to accumulate strong altcoins before they run is still open. Remember that we're still also pretty early in the liquidity cycle as well, with analysts hitting the top of the business cycle somewhere around the mid-2026. So let's briefly summarize some of the metrics and things we need to look for to see where we are in the cycle. First, we talked about the Wyckoff accumulation pattern and why it matters. Then we covered the broader macro setup, how the Bitcoin and Ethereum rallies are all pointing to a major rotation phase. We also broke down the new bills that just passed in Congress and the Genius Act for stablecoins, the Clarity Act to finally define what's a security or commodity, and the Anti-CBDC Act. And these aren't just headlines. They're structural changes that absolutely will unlock a massive new wave of adoption and investor confidence in the US crypto market, something we've never seen before. So if you're still unsure what to focus on or how to position during this rotation, now's the time to tighten up on your plan and stay sharp. And that's it for today. Remember, nothing in this video is financial advice. Always do your own research and understand the risk before making any investment decisions. If you're interested in the projects I'm watching closely, then come and join me in the FireHustle VIP Discord. The link is in the description below. And if you want to see my full portfolio breakdown, I just dropped a video revealing it for the first time ever. Check that out in the description as well. And if you want more videos like this, then hit the like button and subscribe to the channel. Hope you guys enjoyed the video, and I'll see you in the next one.